Welcome to Inside the Deal. I'm Suzanne Stevens. With me today is DeChiara. Dom heads the PE group at Nixon Peabody. Dom, it's definitely a buyer's market out there, and we're here to talk about what sellers can expect out there. And one thing, obviously, is lower prices for deals.
Sure, without a doubt. We've seen the pricing come down, and the big driver of that is the credit crisis. In the past, where you could get 5 or 6 times leverage to do a transaction, you're now only able to get 2 or 2.5 times, and that just by definition means there's not as much money to do a transaction as there was in the past. So what we've seen is deal multiples come down to the 5 to 5.5 times range.
And are sellers ready for that?
If they're selling today, they have to be ready for that because there's really no other options for them at this point.
Right, there's no IPO market.
No IPOs.
If a seller needs to get rid of an asset or needs an exit, an actual sale is the only
that's right.
option. Deal terms are certainly different now as well. What are you seeing there?
Well, deal terms have definitely shifted back in favor of the buyers. And what we are seeing now is the reemergence of financing outs. So in the past, when the credit markets were frothy, buyers were willing to take the risk that they could get the credit and not have an out if they didn't. Now we're seeing that buyers demand a financing out because they just don't want that risk.
And explain to me what a financing out looks like in a deal.
It basically means that if the banks don't come through with the financing, the buyers can walk away from the deal without any liability.
Okay, so similar to a MAC clause, but with a MAC clause, you're looking at an adverse change in the business.
That's right, and we're seeing buyers also try to get MAC clauses a little bit broader to give them some more room if between signing and closing there's a change in the business that does harm to their model, and they need to either recut the deal or just walk away from the deal.
And buyers have more leverage there as well.
That's right.
And you're seeing that in more deals.
Yeah.
So other than deal terms, what about the actual way that deals are structured? What are you seeing there?
Well, we're seeing buyers be much more aggressive on this end of it, and they're now looking for asset transactions as opposed to stock deals. And the main reason is in an asset deal, they can leave behind some unwanted liabilities to get a better deal overall. In the past, they were willing to accept the stock deals, but now that they have the leverage, they're seeing if they can get the asset deals. Sometimes they're successful, sometimes they're not.
And can you give me an example? What's the downside for a seller in an asset sale versus a stock sale?
The big downfall is the liabilities that get left behind, because they're going to have to find a way to deal with those liabilities.
And what might those liabilities be?
It varies from deal to deal. It could be environmental liabilities, it could be a litigation. It just really depends on the particular situation.
Well, let's flip this a little bit and talk about instances where sellers might be at an advantage. Are there cases where that's happening?
Without a doubt. If a seller has a company that is clean and is performing well in this market, they're going to have a process that is reminiscent to 12 or 18 months ago, where you have multiple buyers, where you have buyers willing to pay 8 or 9 times because the amount of attractive companies on the market today are much fewer than there were in the past.
And what about buyers out there? I mean, are there buyers out there on both sides of this? For the really attractive targets, I would imagine there are buyers out there, but what about for some of these more distressed assets?
There are buyers out there for all types of assets, and there are certain funds that'll just deal with the hairier companies, and then there are certain funds that want a cleaner company are willing to pay a little bit more for that.
DeChiara with Nixon Peabody, thanks for coming by.
Thank you.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.